Hello everyone and welcome back to the CleanTechies Podcast. This is episode 75 of the show. I'm your host Silas Manor and thank you for joining us on today's episode. Thank you for your patience with the odd release schedule as well. It's been a bit of a busy time as I've been back in Wisconsin for the holidays, so I do appreciate your patience there. Before we get into the episode details today, as always, a note for any founders listening, and then a quick note from our sponsors. If you are a founder in the space seeking funding or looking for partnerships, please consider reaching out. We're always glad to do our best to introduce founders to capital providers that we are aware of and that we have in our network, as well as we often make introductions to potential partnership opportunities. So if either of those things are interesting to you, feel free to reach out to us kind of any way you like. My email is in the description. You can reach out on the Slack channel as well. And then a quick note from our sponsors. Thank you to NextWave Partners for sponsoring the show and making it possible. NextWave are experts in talent acquisition, recruitment, and retention across climate tech, renewables, and ESG spaces globally. So if your team is growing or you're looking to make a career change, you can reach out to them at next-wavepartners.com or reach out to one of their consultants directly via their LinkedIn page. So with that, let's get into today's episode details. Today, we have a great conversation with Al Subbloie, the founder and CEO of Budderfly. Budderfly is one of the fastest growing full-service commercial building efficiency companies. They help commercial building owners upgrade to efficient equipment and switch to solar by removing the biggest barrier to entry, which is almost always cost. And through their partnership with strong financial institutions, they pay for the upfront capital expenditures of the upgrades, and then the building owners just kind of keep paying their monthly bill. However, after the upgrades are all done, Budderfly is just taking a bit of a premium for providing the service, but the bill is ultimately actually lower than it was before. So very interesting model for building owners, basically to just say, yep, go ahead. And then, in a few months, their bill starts to get a little bit lower. So it's really, really interesting model. I think it's something highly necessary for the commercial building space, which is always kind of really tight on the costs and what they're doing. So the amount of efficiency is so much that they're able to actually reduce that. It's just really fascinating to me. So without any further delay, let's get into this conversation with Al Subbloie. All right, welcome to the show, Al. How are you doing today?
Great, Silas. Doing terrific. Thank you.
Absolutely. I'm really, really excited to have you here. So I think let's just dive right into things. Why don't we just start with a little bit of an introduction to yourself and kind of your early career? I always think it's very interesting to hear kind of the origin story of how people end up getting into climate.
Sure. Yeah. No, I'm a 3-time entrepreneur. I started my first company 2 years out of college. I worked at Anderson Consulting for 2 years, literally to the day. I mean, right to the day. And I built my first company. I did it for about 15 years. And then my second company, I did for 16 years. So I tend to start them, build them, and then lead them. I think the last business I did is relevant in that we grew the business to be the leading telecom expense management provider in the world. And why that's relevant, because it got me into energy, is we were the ones who normalized all those crazy billing systems, not dissimilar to the billing in utilities, which you'll find is actually quite complex. And then I founded the Budderfly model roughly around the end of 2016 into 2017. I've been doing that ever since, obviously.
Mm-hmm. Okay, interesting. So I guess then with that, before we get into the technology, I am kind of curious, what was the impetus for you to go down the route of like really focusing on climate specifically? Obviously, you mentioned the energy bits, but I am curious if there was a certain moment where it clicked and you said, hey, you know what, I need to work on this.
So Silas, I'm going to start out with a philosophical answer, if that's okay. I first of all believe to have an impact on the world, right or wrong, you need to align capitalism with saving the world, because you need a lot of money to have a big impact. Obviously the government does certain things, et cetera. So I first of all started with the fact that managing energy, in my opinion, I think we do a terrible job at it, obviously. And it really bothered me how inefficient most businesses were about the way they manage energy. And it started out to me with one simple gap, and that's that I believe everybody measures the use of energy in the wrong place. which is the utility that sits, the meter that sits outside the building, which really is there to send you a bill. Yet all the use of the energy is inside the building and nobody measured it. So the first thing that I invested in at Budderfly was building out what I call an IoT network that allowed you to measure it behind the meter, because you can't really manage what you don't measure. So I started out with that as a premise, and then the rest of it cascaded. So for me, it started out with a view that we could help businesses save money while we reduce carbon. Doing both makes sense. And it started out with this simple notion that, obviously you can't measure what you can't measure. So we need to build some technology that does a good job measuring the use of technology. That's how it started.
Mm-hmm. Before we get into the nuances, I'm also curious, because I've always like to learn a little bit as well. Could you explain kind of in simple terms how IoT devices work, and especially in this situation? Like, what are the basic components? What's happening kind of on a very simple level?
Sure. There really are only two pieces of data you need. One is kilowatt hours, and that's the amount of energy you're using measured in hours. And then there's what's called a kilowatt peak. A little harder to understand, but think of it like a car. Your tachometer, runs the RPMs of your engine. And at any point in time, if it hits 7,000, the way the utilities work is they bill you for 7,000. If that happens once within a month, you get billed for the peak. So those two data elements are very important to measure. And what makes that up are all the things that go on in either your house or your commercial, building to enable that. But nobody really knows how much HVAC is using, lighting is using, refrigeration is using. And if you don't know that, I don't know how you actually fix the problem. So again, IoT devices literally attach to a refrigeration unit or an HVAC unit. They surround the actual wire and they measure the electron flow over that wire, and they give a fairly accurate view of the kilowatt hours or the kilowatt peaks that any of those appliances actually contribute to.
Okay. And then it just sends it to some place that's kind of aggregating it and reading it, correct?
Yeah, listen, we live in a world of wireless networks. They're not that complex. Over a wireless network, real time, that data flows. And give you a feel for it, we are receiving about 1.2 billion records a day right now. Actual records, which is, again, even if you don't want to get technical, that's a lot of information, which is all of the use behind the meter happening in the building itself. So if you walk in a room and you look up, the lights are using exactly this much right now. And we know that all the time.
Okay, interesting. And then I do want to go into the technology, but before we do that, again, I want to also understand the industry you're in and the big challenges. So if you want to kind of elaborate on the overall picture and what are the key challenges in this industry, so we can go through at some point once we get into it, the way you're solving those challenges.
All right, I'll start out with defining the problem. It's really simple. Everybody agrees that there is about a 30% waste factor in the use of energy in the commercial marketplace. Now, I made a very generic statement, but that's generally true. Doesn't mean, your cousin doesn't do a good job and they're 1 out of 1,000 people, but everybody agrees there's roughly a third that we waste. And that drives me crazy in a world where the world is ending, and yet we waste a third. And the truth is, the technology exists to remove about 30% of that use and still do business the way we do it today. So that's the premise of the business problem, which is pretty simple. And it drove me crazy that we were not able to solve that problem in scale quickly and effectively. And there's some reasons for that, which I'll cover with you in a minute, but I wanted to start out to define the problem. So essentially, reducing that is called energy efficiency. And there's a lot of ways people can do that. People could invest themselves to do it if they knew what they were doing and they wanted to spend the money, which nobody does, or they can hire a third party to help them. So does that give you at least the context of the industry that we serve?
Yeah,
Make sense?
absolutely. So just to kind of recap it, generally speaking, the energy efficiency space is the space you're in, and there's a couple of challenges inside of that. Initially, it was around measurement, and now it's around kind of the dilemma of getting it done. So either they can pay for it themselves or hire somebody to do it. So I think there's probably a good point, unless I've got anything wrong there, to jump off into how you're approaching it. So if you could walk us through what Budderfly is doing and kind of do this in a very step-by-step way, would be really keen to go through that.
Sure, that makes sense. So I'm one who looks in the mirror and I say, where are we and why are we here? The technology exists, yet most companies and frankly houses have not invested to do it. So why? Why is that the case? Yet climate change is happening, and here we are spending a ton of money on renewables to frankly renew something we don't need to use, which is crazy. So you've got to answer the question, why have we not? And it's pretty straightforward. Number one, there are about 50 different things you could do to drive efficiency in the commercial marketplace. And it ranges anywhere from a commodity like an LED light, replacing a light with a brand new light, or putting a highly efficient HVAC unit on your roof. Each one of those requires somebody to write a check. So problem number one, 50 things to do is a lot. It's complex. Problem number two, each one requires a capital expenditure. Both of those, by the way, are difficult for companies to actually do. Remember, problem number three is the measurement of it, which I covered earlier. And problem number four, there are no ways to track how well that investment actually produced results. Because remember, the utility bill is very difficult to read, as you probably know from your home. You probably don't even bother reading it, you just pay it. So 4 problems create friction. Why people haven't done it. So what we did at Budderfly is I turned it on its head a little bit. And I said, wait a minute, nobody wants to buy new HVAC. They don't want to put in new lights. What they want is a better outcome. So they want a more efficient outcome with less energy, and they'd really rather not write a check at all. So at Budderfly, we decided to outsource the entire infrastructure that I just discussed with you, everything. Customer just raises their hand and says yes, and Budderfly goes out and spends our money to upgrade all of those different components. We manage the components. We even bill it better than the utilities so the customer could see what they're saving. And the customer does not write a check for anything. In addition, we actually hand the customer savings. So they get a reduction in expense, and they get what I call a lot of free toys. And they don't have to do anything because they're not experts. Budderfly is. And we're the only company, really, frankly, in the world, Silas, right now, who has decided to take on the entire problem and make it that easy for the customer. So we deliver total optimum outcomes on our investment, not the customers. And we bear the entire risk to deliver that optimal outcome. May sound a little complicated, frankly. For us, it is, and we're good at it. For the customer, it's really easy. No excuse anymore why we wouldn't pull that 30% carbon out of the air. They even get a pickup on their profitability to just say yes. And it is that simple. There are no hidden agendas here on it, and we're very transparent about the entire model.
So generally speaking, the idea is, maybe there's a couple tiny clarifications I want to ask here, but you will handle the entire installation process, paying all the CapEx up front, removing the friction, and then you're arbitraging, they're getting a bit of savings, and you're going to be able to take some of that savings that they're paying as payment over a long course of time for the systems you've installed.
That's correct. More specifics, we do it on a 10-year basis. So you know how solar goes to 20 because they have to amortize that. We do it over 10. And yes, the way the economics work is quite simple. The first layer of savings, and it's contractual, and we give it to them right away, the customer gets. No questions asked. Then we go out and spend a lot of money to upgrade everything in the facility. We then drive the actual usage down much more dramatically than what we gave them. And we need to drive it down enough to pay for everything that we put in and to pay for all of the services we do to monitor that for 10 years. And by the way, we maintain everything. So if a light breaks in year 7, Silas, we replace it free of charge. We pay for all that. We have to cover all those expenses. And then there's some hopefully left for us. And then what we do, the last piece of our agreement, is above a certain level, and it's usually around 30%. We split 50-50 with the customer. So they can get additional savings, assuming, and we want them to root for our success, right? Everybody has to have skin in the game here above a certain level.
Mm-hmm. Yeah, that's interesting, aligning the incentives. I think that's quite fascinating. I'm curious, I don't want to go down a rabbit hole too much, but is there a component here that can be that these customers can participate in the carbon markets because they're avoiding putting carbon out? I'm not sure if that kind of plays in here.
It is, and we have not yet. And we're growing. I mean, we're probably growing close to 100% a year right now, which is obviously a testament to the Budderfly employees and the model and our customers. But we have not yet both capitalized or monetized the carbon credits yet. Mm-hmm. We're starting to talk about it a lot because, and we're seeing a lot of changes in the regulatory climate, obviously with carbon reporting, which we do provide the customer. But the answer to your question, yes, absolutely. Mm-hmm. An opportunity for additional benefits will come out of that.
And is the reason you're not participating in it now primarily because it's a little bit kind of difficult to understand what the price is and it's not super well understood, or has it just been mainly you only have so much time in a day to focus on parts of the business?
I'd give it 50-50 on both of those. We're literally hiring somewhere between 60 to 80 people as we speak. We're growing at near 100% on an annual basis. And Silas, our numbers are not small. We've become a big company overnight. So that's not, $5 million company going to 10. It's greater than, almost 10 to 20x that. So yeah, it's a little bit of both. The carbon markets right now, at least for the markets we serve, are not well defined enough and well understood enough. And then we have a lot on our plate. Mm-hmm. My challenge, frankly, is a lot of people say, add more segments to your market. Let's start signing up ESCOs to start adopting our model because it's a better way to do business. And we do. We're growing, like I said, but we have to pick our spots here. But next year, I think we are going to focus on that topic because it's such a hot topic in the market.
Yeah, and I think I saw something recently. There's a bit of talk about it going from self-regulated to actually regulated. So I think that there'll be some changes most likely coming here, especially with the election results here. I think this is something that could end up getting brought to the table. One thing I wanted to ask is, generally speaking, could you define, and it seems like from the website, it's pretty broad. So instead of perhaps who are your clients, maybe who aren't your clients, you just want to define who you can work with.
Yeah, and I don't even mind telling you who they generally are. It is unique to us versus everybody else. And I have to say that it started with our first customer when we signed up Subbloie being the sandwich place that everybody certainly has heard of. And let me tell you who our clients are not first. We decided not to go for the really, really big office buildings. And it seems like everybody else, the ESCOs, some of the other, energy efficiency as a service players, it may seem obvious to say, let me go for the biggest buildings first, right? Because they're big and I could tackle them one at a time. And the problem with that is those really big buildings are very custom. They've got really complex HVAC solutions that require, 10 engineers to figure it all out. And their sales cycles are 2 years long. So what we did is we decided to go into what I call the multi-location market with a big focus on QSR, quick service restaurants, as well as convenience stores, casual dining, retail. We like to do companies that have many of a similar pattern. And that does two things. Just think about it. We are using a lot of our own capital to invest in these locations. So if we do 5, 10, 20, 50 locations, we pretty much know exactly how 5,000 or 10,000 within that company are going to behave and produce. So that allows us to get capital easier than anybody in the market. The second thing it's done is we call it land and expand. We're able to start out by adopting a brand early, and that could be a brand like Dunkin' or KFC or McDonald's, or casual dining, like an Outback or a Denny's, as an example. By the way, all of our customers. And we could get successful with 20 or 30, and then everybody else looks and says, wow, this is great. I'm going to jump on board with that. So that allows us to get to 100, 500, and 1,000 very quickly.
Mm-hmm. Out of curiosity, have you seen, because obviously it sounds like you mentioned a lot of franchises, right? Not a lot of these are corporate run. Have you seen that the community inside of the franchise space tends to like talk a lot and they start to see this and then they catch on very quickly? Or is there also some level of partnership from the kind of corporate brand management that's saying, hey, by the way, here are some solutions if you want to be, more eco-friendly?
We listen, you and I and everyone are living in a world where every quarter in a year, climate change is becoming more crucial to the survival of the human race, right? So, and people are realizing it. So what's happening is the brands themselves are beginning, not all of them, some are a little more advanced than others, are beginning to care a lot. Now, do they care enough that they will force their franchisees to spend the money? No. But think about it. They can talk to Budderfly and say, Budderfly, you're spending the money. So it's a much easier pitch for them to say, we want to save the world. But this model over here is interesting because someone else is willing to invest in our locations, and my franchisees can save money. That's why I think the timing of this is really, really good. And we're right in the middle of that. Sometimes we start a brand where we will win, 2, 3, 5, 10 franchisees. Then word spreads to corporate, and then we'll actually do a master services agreement with the brand itself, which begins that rollout. And we've got a number of those that we're pacing on right now, which we're pretty excited about.
Mm-hmm. Yeah, I think that's quite fascinating. I do think it's interesting how this plays out and kind of the evolution of people understanding, hey, if I don't have to have any capital expenditure and I can ultimately lower my operating bill, right, it's going to be more profit for these individual companies, right? So I think it's interesting dynamic you have there. One thing you mentioned is that you help report on sustainability data. Could you talk a little bit more about that? What data are you reporting on? Is it the entire ESG frameworks, or is it really just kind of the E part of the ESG that you guys help with the data reporting on?
We have a big focus on energy use and specific savings and carbon. There's a couple different scopes, as you know, in it, but we focus mostly on the facility itself within that spectrum. We're going to expand that, obviously. We take over the billing. It's a big difference with us and everybody else. And by taking over the billing, so the customer literally gets a bill from Budderfly, not National Grid or Duke Power or somebody else. We get the bill from National Grid and Duke Power. Now, we actually use all the data from the utilities. So because we're sort of in the middle between the customer and the utility, we have a complete record of exactly how much kilowatt hours saved relative to the past and how much kilowatt peaks are saved, which translates directly to a carbon reduction. So our ability to do exact reporting, which for us is just an outcome, and give you a feel for it, of our 150 people, about 30 are in R&D, most of which are software developers. We're building a tremendous amount of software to scale this. And part of that is the reporting that we provide the business, literally turnkey, that tells them exactly what carbon reduction they're producing. That reporting is beginning to adopt to the SEC requirements if they're a public company, even if they're private. So you're going to see us, literally have them have a turnkey response to what the market's expecting them to do. That's pretty crucial to what our model is all about.
Yeah, I think that's actually really fascinating. We had somebody on here a while ago talking about the ESG data tracking kind of SaaS market in general and how it's going to play out. And it's, there's a lot of different opinions on it, but to me, I have this feeling that a lot of people who offer a service like yours will just add it, because it's not something that's necessarily complex once you understand it. You can build the software to do it. And I think it's really interesting value add that you can bring to these clients as well. There's a couple random questions that just come to mind here that I'm kind of interested in asking about. One of those is, if you are providing the capital expenditure and kind of paying for all the equipment, and especially in a lot of these cases, these are, potentially just franchises, maybe one or two people, or somebody owns one or two of them. How do you hedge the risk of if they go out of business, right? Because a lot of small restaurants don't make it. I'm curious if you own the equipment throughout the duration of that, so you have some kind of value that you're holding on to until the end. Like, how does that work?
So here's the way our model, it's a good point. We're a 10-year deal. So it's a 10-year, and you're right, these people need to be there for the 10 years because we have to use the difference between what we save, et cetera, to pay for everything. And we bear the risk on that. We do offer our customers to be able to leave after the 5th year. And they're able to pay the remaining. So we do a straight, I don't mean to be technical, depreciation of that stuff over 10 years for the most part. So if they pay the remaining balance, plus we put a little premium, not to invite them out the door, they could certainly leave. Not that anyone's doing that. So we like to do business with people we believe will be there that long. Mm-hmm. We try to do business with brands that, will stand the test of time. That's one. The second is we're in 49 states. So we're geographically now everywhere, including Hawaii. We're just not in Alaska. It's the only place we haven't done yet. And when I built the model, my goal was to build what I call a portfolio strategy. And if you know what a portfolio is, it's meant to hedge for risk. So we end up with such a small percentage of people in this business because we're dealing with, brand names. Even during the pandemic, the people that went out of business was actually relatively small. You'd be surprised because we're so spread out amongst these different businesses, amongst multiple brands. The portfolio strategy to us is a protection for that. But, like any portfolio, you could build almost like an insurance policy. You could build a small amount of hedge into your pricing model to make sure that if only a few have a problem, you've covered that in the many. And that is working really well for us right now.
Yeah, I think that's really good. It's obviously very sophisticated to do that. So I think it's obviously very, very good business model there. One thing I was curious about is also you mentioned obviously, you're paying for all these things up front. What was, or could you maybe walk us through, I'm not sure how much you can tell us about the kind of the capital raising for you to be able to have this cash up front to be able to run this model? Because I know there's a lot of companies in the climate tech space that are trying to do things like this, where it's like, hey, most of these companies, most of our potential customers will not pay this up front, or it's going to be very difficult to convince them to. So let's take the friction away. What was the challenge to raise that capital to be able to do that and provide that model?
Yeah, no, I don't mind. I'm an open book with that. It's a learning experience and fun. A couple things. We built a model that is land and expand. The benefit of that is it doesn't take a lot of money to prove the model with a brand. And then when you roll it out, everybody feels comfortable that even the provider of the capital can make money, right? That's the difference, Silas, I said earlier, between going after a 2 million square foot facility where it's a big bang once on a custom outcome. That's a risky model. And because of that risk, that's why it takes 2 to 3 years for that deal to happen, because nobody wants to spend the money. For us to do 5 Burger Kings or 5 Dunkins or 5 Subways is not that much money relative to doing 1,000. So start out with that. Now, this time around, it's my third company. I was fortunate that I invested millions of my own. So I was able, obviously, to fund the initial beginning of the business. I also have a pretty good track record. So I was able to attract a couple of venture partners that I was successful with before. That made it a lot easier. So we raised, I think it was about 85 million prior to the round we just did in July. And that 85 million was made up of, I think it was about, probably about 30 million in equity, and the balance was debt. So we used debt to buy the capital upgrades, HVAC units, lighting, metering, controls, all the things that we do. And I decided the end of last year that we were really growing and we needed a larger financial partner. So we went out, we talked to a lot of large private equity firms. We hired a bank to help us, and we ended up selecting Partners Group. And you probably saw the news on it. We closed the Partners Group deal, which we announced of roughly $500 million of total committed funds. By the way, again, all equity. And because they are very focused on climate change, they like to align capitalism. They also care about returns for their investors. They're both important. And I really wanted someone with very deep pockets who believed in the vision, and they do. So that was able to pay off all that debt that I mentioned to you earlier. We also, the two investors that I had, they're not part of the cap table anymore because Partners Group wanted to own more. But I still remain the second largest shareholder in the company. So great financial partners. We're going to have a big impact on the climate. We're almost doubling every year in terms of revenue. And I've got a great financial partner to be able to do that because they believe in it. We've also proven it enough now with that land and expand model that the risk is relatively low to the outcome.
Yeah, no, I think it's quite interesting because I was just curious to understand if there was the credit play, because obviously it's a little bit difficult with rates at the moment. So I wasn't sure if it was kind of based on a certain premise, but it seemed it's quite interesting to see how you did that. I'm always really curious for people listening because there's a lot of people who are starting their own companies listening, so they might be interested to learn a few tips.
One other point on that, because I think it'll matter to them. We have plenty of money to do what we do at this point. That said, I think in the long run, in our model, we're better off using reasonably priced debt to buy all this capital upgrades. It's smart because the model in the 10-year haul is profitable enough to pay that debt back. So we are going to go out, even though we don't technically need it, we probably go out and get a debt partner in addition to the Partners Group deal. And you're right, the rates are going to be a little bit higher, unfortunately. I hope that won't last forever.
Yeah, I don't think it'll last forever, obviously, but it might be some time from what I'm hearing. I'm no economist, but it is interesting. One thing, I had this written down as a question, but I don't necessarily, maybe it's just worth noting and having you just comment briefly on is, since you've grown so fast, what would you say is the key reason why people are so excited about this kind of solution to their problem?
Simplicity for them. It's about as easy as it gets. I'll tell you what do you think the number one objection we have in all the deals that we're doing? This is too good to be true. There must be a catch. And the truth is, there is not a catch, and it's not too good to be true. When you dig into it, it's a model that's unique that, frankly, I think in the current climate change environment, the world needed, because we have to get rid of friction to move quickly. And nobody else has done it so simply for the customer. There's always what I call the if then else for the customer. Well, wait a minute. I'm sort of bearing that risk a little bit. I don't like that. How do I measure that? Well, how am I going to be sure that the savings is really there? We get rid of all that. It's gone. The customer doesn't do much and just say yes. They don't spend any money. They're not bearing any risk at all. And they get to save the world while saving money. Their only complaint might be, well, wait a minute, could I do better on my own, or am I better doing it with you? And to be honest with you, the complexity around this, there's no way anyone's going to do better on their own. It's just not going to happen. And I could point that out to people as you go through the math. We're bearing the entire risk. We have to get above a level that's very exciting on carbon reduction before we make anything at all.
Yeah, this is why I think it's fascinating, this whole idea, because the reason people assume that there's got to be a catch is because usually capitalism in some ways has some catch because there is somebody getting the short end of the straw in some cases. But I think that the interesting aspect, and the thing that I think this is a perfect example of why climate tech capitalism, I think, is just, or climate capitalism, however you want to call it, is very fascinating because the incentives must be aligned in a way that is a reasonable expectation, right? Your business can make money, they save money. Ultimately, the planet is helped in the end. So it's a win-win-win situation for everyone involved. So I think it's really fascinating to see this. And I am personally very excited to see how other businesses continue to roll out models like this in the future. And we really kind of shift the mentality around like a lot of people think, capitalism is bad, et cetera, but you can't achieve a lot of these things without it, right? So I think this is really fascinating what you're doing. Um, One thing I wanted to go over is we didn't talk about the timeline necessarily. From start to finish, when somebody raises their hand and says, I'm in, they sign the paperwork or they're doing an assessment or whatever. What is the time process to start this process and then get to a point where they're actually saving money?
So the way our deal works, we've divorced the customer benefit from the actual work, and to their benefit, by the way. So the way the deal works is they get the prescribed discount upon the first installation of anything, any one thing we install. It could literally be a metered plug, and they start getting their discount. Timing, they sign a very simple 2 to 3 page agreement with us. So you know how the ESCOs have 100-page documents? Ours is really simple. Within, I'd say, weeks, they're onboarded, and we are kicking off the project. We try to install the first something between 45 and 60 days, right? And we carry a lot of stock, by the way. And oftentimes it could be enhanced lighting, because lighting is easy to stock in this market. I will tell you that, we're not without challenges, and I'm an open book on that. HVAC right now, brand new, highest efficiency HVACs. I mean, and I don't mean to get technical, but they're called 21, 22 SEER units. The supply chain is pressuring that side of the market. So for a brand new HVACs, it could be 6 months before those go in, only today. Normally, it would have probably been about 8 weeks, and we have no issue buying them. By the way, now that we have a lot of capital, what we're doing is we're buying ahead. So we're going to invest the money way ahead to buy, 1,000 or 2,000, because we pretty much know what we need in this marketplace. So within probably 90 days, they could have 60% of what I call the toys in place: refrigeration controls, temperature monitoring. They could have sub-metering in place. We could be getting data. They could have brand new lights, et cetera. And then there may be a lag on the HVAC side, depending. So just to give you a little feel for it. But their discount starts hitting probably 45 to 60 days in from signing an agreement.
Yeah, it's a pretty quick turnaround time, to be honest. I think, especially given some of the logistical challenges, I think that is pretty solid. One thing I wanted to ask is if you think that this kind of no friction model is the key reason that's responsible for this, what you called, I think it was interesting, obviously, the butterfly effect working. Is it this CapEx model that's caused that?
Yeah, and it's, one thing, it'll feel like it's CapEx, right? Someone wants to give you money, take it, everybody runs and says, let's go. I will tell you, the complexity and the management of the complexity is almost equally important in the fact that we take it on with skilled people. We've got a lot of great employees. We carry probably close to 35 project management folks that are managing all these installations. And we have a whole group of engineering testing people. I mean, we're testing heat removal technologies that will knock your socks off right now. We do that on our investments, so we can bring that to the market. So I think the simplicity part is not just the money. It's also, well, this is easy. I can maximize the outcome. I could pocket the net benefit, and then I can go to the cocktail party and brag that I'm saving the world. Mm-hmm. You put them all together, it's kind of like, why would I go the complex way? It's not worth it.
Mm-hmm. Yeah, no, I think this is, that makes a lot of sense. I guess I want to get your comment on this model, on this kind of zero CapEx model for the customer. Which inside of climate tech, what are industries that you think can really or should roll this out, or other industries you're seeing roll this out? Because I think that it's a model that is really attractive, of course, to customers. So I'm just kind of curious to get your thoughts more broadly on where it could be implemented or where it is being implemented.
So I'll answer you in two ways. What could be, and then what we can practically do ourselves. They're two different answers. The model will work for any industry that has what I call a consistent pattern of energy use, generally consistent. That would be inclusive of restaurants that have patrons coming in and out. That would include retail, any kind of retail. Frankly, it would include office buildings, frankly, large or small. It would include schools, mush, It would include healthcare, nursing facilities, frankly, hospitals, probably hotels, really a lot of different industries. What it does not include is production facilities, so manufacturing, industrial. And you could get why. We have to get a common level of baseline to base discounts and savings off of. If you're running a huge production run where you're, basically really busy this week because you had a big customer ask you to do things and it's basically an anomaly, the model doesn't work that well in those industries. So it works in quite a few industries. It probably represents, my gut, probably between 50 and 70% of the entire commercial energy spend. This model would be ideal for. So if the energy spends about 150 billion a year in the US, which it is, it's probably somewhere between 75 and 90 billion of it would be applicable to this model. Now, talk about us. When you start growing the way we're growing right now, my dilemma, frankly, is I want to continue to expand those segments, as you would expect. But how much growth do you put a company through, right? We barely even penetrated the core markets we're going after. And, do we grow at 200% a year? So you now, Silas, know our challenges because I'm an open book about it. By the way, I'm excited by the business problem. And you probably are figuring me out. I would like to figure out a way to grow at 200 to 300% versus, 80 to 100.
Yeah, but it's also the responsibility, right? You have to take the responsibility to grow at a reasonable rate because otherwise you can risk the whole thing, right? I think this is always really fascinating to see companies go through that because it's extremely difficult transition, especially. I mean, you've already got through probably the very difficult transition, which is that smaller number of people that's really tight knit and it goes to a bit bigger. But scaling it up and keeping it not too bureaucratic is also important, right? Otherwise, you can't achieve. Without the efficiencies, you can't achieve what you need, right?
No, you're absolutely correct. That's a true statement and a very good point. The one thing that is possible if we were to partner with, frankly, some of the old line companies who want to get into the newer line space, we could enable them with our tech stack. And so that's one thing we are beginning to pursue is not do it all for everybody, but enable them with our tech stack and let them replicate what we did. So that's one thing that we're going to start to pursue.
Mm-hmm. One thing I wanted to get your comment on, and this is mainly targeted for the answer I'm targeting for potential entrepreneurs in the space pursuing this zero CapEx model for maybe another industry. What are the biggest challenges that you think people need to be aware of to keep an eye out for, or at least, definitely be aware of as they're entering this and trying to pursue this model?
The measurement of the outcomes is not easy. It requires, frankly, a heavy software focus, especially if you're going to scale. I mean, we're billing thousands of customers every month right now. Getting that right enables them to pay comfortably, which they're doing, because we put a lot of time and effort into the software. And then being able to report accurately on a carbon reduction and an actual save is crucial here. And to do it in scale, you can't be doing it on spreadsheets and PDFs, et cetera. You really have to get it to a point where it's the push of a button. That's not an easy thing to do, as you can probably guess. And we've written integration to over 400 utilities for all that billing data and the rate data. That's all happening pretty much every day, every week of every month. So being able to scale that is a technological hurdle to get over.
Mm-hmm. Interesting. I think that's very, very, very helpful. One thing I wanted to ask, I'm just kind of curious, another came to mind is, are there any of your clients that witness, I guess, I don't know how to say it, an increase of foot traffic or customers because they can tout, hey, we're a more energy efficient building, et cetera?
We've heard, we haven't measured it ourselves. I'd like to. We've heard a good portion of people say that has happened. I will also tell you that when you go into this market, things are pretty old, especially in the older brands. And old means the HVAC units are 15, 18 years old, and it's hot in the summer. So just the fact that it's hot, it's uncomfortable, affects employees and it affects customers coming in. Same thing with lighting. When you walk in, a QSR that has old lighting, you're buying food there, you're beginning to wonder whether you should or you shouldn't. So the sheer upgrade of that infrastructure has had a big impact. And what we're working on now is to literally put on the window a stamp of approval, a green approval that we're going to focus on climate. And a lot of people say, especially I'd say with the younger generation, really matters where people go to buy their food. It makes a big difference. I'm seeing that trend increase here literally on a quarterly basis. By the way, all those are good for Budderfly. They're good for the world. They're good for climate change.
Yeah, I mean, I don't understand how people argue against this stuff really, because it's like you get the savings, you're doing better, and then in addition, there's a good chance you're going to increase your customers actually, right? So more sales in any ways. So I really have a hard time when people disagree with me on these things. It's part of the reason I started the show, right? One thing I wanted to touch on, because I think we have time to go into it, is your comments on the regulatory side of things right now with the space. Are there regulations in place that kind of play into what you're doing? Do you see some things coming down the line? If so, or if not, what do you think should be the regulatory moves that are made here, if any?
So it's a good question. I'll hit it high level. We don't have a lot of time. The IRA that came out, I'm happy that there was such a focus on incentivizing certain things. So just the fact that there's some focus on it's a good thing, as you would, Silas, probably agree. It probably had a bigger impact, frankly, on renewables. The whole world thinks that we're going to solve our problems with just renewables.
Mm-hmm.
And I'm sitting here looking at a 30% takeout saying, wait a minute, even for renewables, we need 30% less. Let's go get that done. So they didn't really attack our space in any meaningful way. So that was a little bit of a gap. That's okay, right? My job is to get a big enough voice so they start to listen. Because listen, we're a little more complex. Everybody says, let's just throw a bunch of solar panels out there. We use the sun and we get rid of all, we get rid of all the carbon. It doesn't quite work that way, as you can probably guess. So, I think the government could probably have a little more focus, especially on commercial. The commercial space we occupy, just give you a feel for it. The average QSR spends between 5 to 10x more energy per square foot than the average office building. 5 to 10x more density of energy use per square foot. You can understand why. And I don't think there's a lot of recognition of that in the market, but again, time will tell. Other regulatories, I think a lot of people are debating over incentives, the utility incentives to incent people to do things. One big area that they could fix, everybody incents one thing at a time. If you do lighting, I'm going to give you 30% back, or I'm not. And to me, I'm outcome oriented. They should incent the entire outcome, not just the outcome of a single component, because that forces the vendors to sell single components. And the poor customers now have to buy 50 different things to do anything. You see how the whole thing splinters? So I've got my opinions, as you can tell. We don't have a lot of time, but I thought I'd just give you a little tip of the iceberg of some of the thoughts that we have and we see.
I know. I think it's quite fascinating. I'm always really interested to hear from people in the space what they think, because I have mixed opinions on regulatory action. Like, I'm not necessarily sure it actually achieves the outcome desired most of the time, but at the same time, like, we're looking at the EV adoption curve, and I think you could safely say that it's largely due to pretty decent regulatory action. So maybe my opinion changes over time on this one. I guess I do want to ask really briefly, because I think this is important, is people, the reason this podcast was started, the reason you're able to achieve this is people are finding out, hey, this is actually the better way to do things. How are you going about trying to kind of proactively educate people without having, that one-on-one sale process, to get people to understand what is going on in the space and why this is such a better option?
So you and I are looking in the mirror right now. This is a good example. I'm talking to probably 2-3 groups a week right now. A year ago, it was maybe one a month, right? It's very different. We've invested pretty heavily in our sales and marketing organization. And frankly, on the marketing side, as I say to our marketing team, and it's a great team, we've got content writers, we've got folks managing PR. We're going to go literally to 50 different trade events next year, 50. And we'll spend a very large sum of money on basically spreading the word out there. We had a presence at Verge, as an example. We hadn't been there previously. So our goal is to get out there and spread the word, and we're going to spend some dollars to do so. It's well worth it. But it's a little bit of a ground game, as you can probably guess. There's a bit of an Air Force opportunity or an air game opportunity here to go after, whether it's through PR or these podcasts. We appreciate what you do. We really do. That's why I wanted to get on here and talk about it. You can probably tell I'm very open about the challenges, about what's good, what's bad, and you're doing your part. We're trying to do ours.
Mm-hmm. Yeah, thanks for that. I think one thing I'm always trying to wrap my head around is how I really believe that people kind of their habits start to get formed when they're young. And I'm always curious about how people can be educated on these things and at least be aware of the possibility of these savings and these solutions out there at a young age. I'm always curious, if there's any way at a high school level, perhaps people could start to learn about these things. Because I think that so many people are just not familiar with this. But I do have hope for the younger generation being aware of climate change, that they're at least asking the question why and how can we fix this. But I want to wrap things up here. I know we're running out of time. So do you want to just close us off with the biggest way, kind of where you see the industry going, things you're excited for the future, perhaps the next challenges you think we're going to run into now that we've solved this level, anything that you want to end with?
Yeah, no, we've done a good job aligning capitalism with saving the world. I always tell our team, I do a company meeting once a month. And I share with people we're saving the world, but we had to put capitalism behind us to do so. I don't see how you do that in scale without having a lot of capital to get that done. We live in a world where capitalism is going to drive that kind of adoption, and it's crucial. We're going to add renewables to that mix. I'd like to get to a zero carbon footprint for the entire industry. If you run the math against it, out of 150 billion of total electricity use in commercial in our marketplace, the restaurant multi-locational side of that, when you add those segments that I talked about earlier, it's roughly a third of the overall energy use because of the density. If we can pull a third of a third out, we're having almost a 10 to 20% reduction in carbon here, and nobody has to lift a finger to spend $1 to do so.
Mm-hmm.
You would wonder, why don't we just flip a switch and do it, right? And that's what we're trying to do to some degree. So we're pretty excited about that. I'm excited about it. And you know what? There's no judgment in the game here at all. If someone wants to be selfish because they're saving money, fine. We aligned it perfectly. You can save the world at the same time. I decided not to try to depend on the whole world philosophically getting behind the messaging. I want to do both, if that helps.
Yeah, no, I mean, I completely agree. I think that the technology adoption curve it's just going to be this way. Like you can't force people to give up something because the loss aversion is very difficult. Right. So you have to align it. And I think I don't know. I'm just extremely excited for the ways people are solving these problems, like what you're doing. It's really, I guess, inspiring to me to see people coming up with these creative solutions. And to me, I honestly, just on a human evolution level, like people really digging deep to find ways to innovate things that we never thought would be innovated, right? Like everything in life can be innovated to be a little bit cleaner. So I think it's just really fascinating time to be alive. Obviously a lot of challenges to deal with, but at the same time, like really, really cool times in my opinion. So really thanks for coming on, Al. I really appreciate this. This has been great. And I look forward to following your guys' journey as you continue to grow.
Well, Silas, thank you. Really appreciate your focus on this. It has been fun chatting with you. Would love to come on again sometime and talk about progress and how we're both saving the world and growing the business. So appreciate the time today.
Absolutely. I'll have to put it down on the calendar. We'll chat in the future. All right, thanks everybody for listening to today's episode. If you enjoyed, please do share with someone who might find it interesting. If you also enjoyed, we would definitely really, really appreciate a review on Apple Podcasts. It's very helpful to increase our reach. And do connect with Al over LinkedIn. Check out their website to learn more about what they're doing at Budderfly. And again, if you are a first-time listener, please subscribe and tap the bell for notifications if you are interested in following along with our journey. A quick note on our next episode: it will be with a special episode with Joe McLeod from And End. That's ANDEND. He's an author and consultant who helps people re-envision endings. So this is a bit of an interesting topic to me. This is not only from a circular economy perspective, but also from the customer experience perspective for their experience of the ending of their products, the end of life of their products. A lot of effort is usually put into the buying process for customers, but in most cases, the ending is completely neglected. So this is a really fun episode, and if you're a nerd about an entire life cycle of products like me, you should like this. Again, really, really fascinating episode. Joe has a lot of interesting things to share. His perspective on things was just completely fresh for me and something I had never encountered before. So really do like this episode, and I think you will enjoy it as well. But stay tuned for that next episode. And thank you again for joining us on CleanTechies Podcast. We will see you next time.